My next guest, though, just slashed his price target on the stock by $120 to $320 a share, concerned about Tesla's full self-driving pricing and its robotaxi prospects. Let's bring in Tom Narayan. He's the global autos analyst at RBC. And Tom, those are the very issues that are supposed to keep them insulated from the day-to-day right now.
Yeah, it's interesting, right? I think a lot of the discussion in the media, of course, is on the car sales, but we're actually looking at the long-term dynamics. Autonomy is really what drives our price target. And what we did was took a measured approach, cut back our FSD pricing and our robotaxi penetration numbers in Europe and China. But it's still a $320 price target, which still would be upside from today's levels.
Right, but what exactly has changed? Because, look, shouldn't they just get a license in California this week that would allow them to start operating robotaxis?
Yeah, what's changed is, we've had a lot of discussions with different management teams at OEMs. We just had Mercedes on the road last week talking about their level 2, level 3 plus autonomy product. And, we had Aptiv at CES. We had a number of companies talking about how they view autonomy as really as a Me Too product for brand differentiation, as opposed to trying to price this to the consumers as a profit center. We also heard about BYD's God's Eye product, where they're trying to make it standard, right, on lower models. So when we look at all that, we look at Tesla FSD, we went all the way up to saying they would be at $100 a month pricing down the road. Now we're thinking, you know what, this may be more of a commoditized product as other car companies offer this. Let's drop this to $50 a month, which we think is more realistic.
Right, but it's interesting that you say, in other words, because this has been a huge debate for the past couple of years as to whether Chinese competitors are A, real competitors, B, would ever catch up and threaten Tesla in a meaningful way, C, whether that only matters outside of the U.S. because we have significant protectionism here, and D, whether that would ever matter to their sales domestically. And it sounds like you're saying the answer to all of those now is yes.
Well, I think we have to break that up a bit. I think the Chinese competitive threat is most severe in China, which is, of course, Tesla's biggest market, right, for sales. So that's something we definitely have to monitor. I totally agree with. But in the U.S., Tesla's home base for robotaxi, which is the bulk of my valuation, we see Tesla capturing about 20% of that robotaxi market. Don't see the Chinese really entering there, even on car sales. We really don't see that being as much of a threat. It's really in China, which, not saying that it's not a risk. It is a big risk. It's the biggest market. That's really where we see the biggest pain point, in China.
Understood. And of course, like you said, if that's the biggest market, it'll have an impact. Here, as mentioned, it's a different story because of some of the barriers that we have. But do you have any concerns about Tesla's ability to deploy that technology?
Of course, we have to see what happens, right? In June, they will unveil their robotaxi service in Austin. What if it is unsupervised FSD with a camera-only system without a driver that we see in June? That would be pretty tremendous, right? The only other robotaxis we see in the world have LiDARs and radars. They're quite expensive. So if Tesla is able to undercut the market with a product like that, that would be quite significant. So it is kind of a wait and see, admittedly, but we have to really see what is the FSD product that we do have today. It's quite a robust product. For a level 2 plus offering. There's really nothing like it today.